Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today we're going to go through, we'll do a regular market update. I'm just going to go through the liquidity stock list that we have in there now. We added in the 4 legs, so I'm just going to show you that to you guys. Shawn's going to go through earnings. Earnings is really picking up, and I think Bob's going to show, how he's tracking so far. So that's what, the agenda is today. I guess before the market, we went through the state 2 target 3 met back test last week. So I just wanted to see if anyone had any trouble with that, implementing it, or any follow-on questions to that. Just unmute and pipe away if you have any.
And Josh, I didn't see in mine, this is Shawn, but I didn't see in mine, but did you have any that that had populated as an alert over the past week or since the last meeting?
No, I didn't check.
Okay. No, I didn't either. I just didn't know if, there was anybody that did save it and they had any that they wanted to discuss if some populated it or not. So it was just kind of throwing it out there.
Okay. Yeah, thanks.
I didn't check either, so.
Hey, Josh, this is Lee.
Hey, Lee.
As you know, I ran a back test from all of 2020, January 1st, 2020 to 2021.
Right.
And I thought the results looked fabulous. It just, there were a lot of trades last year, and COVID was on. That caused the market to go down. Whenever it picked up, this seems to me to be like a trade that we could market goes down again for whatever reason, then be ready, because this can be a great trade, I think, during a recovery.
Oh yeah, definitely. Yeah. So, the thesis behind this trade is, bullish stocks. They do 1, 2, 1, 2. I can pull up, SPY or Russell. 1, 2, 1, 2. So those twos is where we want to enter in for the next leg up. So as those stocks come out, those trades come out, obviously use your discretion on them, but you basically want to look at how it's done in the past, and if it's performing, if it's doing well, if it's doing like 1, 2, 1, 2, like a very bullish stock, gets into state 2, and then at that point that strategy has worked really well. I know Gail, I don't know if she's on there, she's been trading it very actively. The back tests that you ran, Lee, were those long calls, or were you doing a spread?
They were long calls.
And
gosh, I want to say there were 300 and change trades, and it had a win percent of about 82. And I don't remember the exact number, but over the year, I would have been up, I think 30,000. It just looks like. And the average trade was $600 and some change there. And I don't know, just based on the history of the year 2020, it would have been a great trade. But
yeah, we've been tracking it for a while. I mean, it's performed well through, obviously when the market rolls over, you're going to get losers when it goes from, like the market goes 2, 4 and then down to 8, and there's not enough time to recover. But, so that's your, Lee, we're having a little trouble here. Your audio is kind of going in and out. but most of the time, those it's going to go 1 2 1 2 type thing, bullish markets. So yeah, that's the one time you get whacked. And most of these they do come in bunches too. So you know so you'll have to, like, if 10 come out in one day, when the market rolls over, you'll probably have to pick which ones you want there.
Yeah, from the back test, to me, it looked like you just play them all and go with the 82%.
Yeah.
Now, maybe a secondary indicator could be found, but just on the basis of what I'm seeing, it looked good.
Yeah, I mean, there's always layers that you can add in, in that, and I kind of showed you guys briefly last week, how you can add in secondary indicators you want to use, like moving average or anything else. You can add it in there and try and improve the results. The way I do this, like testing like that, I'll take a shorter time period, maybe the last 2 years, and test that, and then try and find indicators, and then I'll apply it to all the way back to 07 to make sure it lines up well. So that's kind of the process like we built with the studies, and right now I'm going through the studies and trying to find improvements for those so we can improve win rates, profits, all that stuff, all the good stuff. So that's a big project I'm doing now. I wouldn't expect anything coming out in the very near future, but a little down the road, we'll probably be making some adjustments, improvements. I'm not going to call them adjustments, improvements. So but yeah, so it's just another thing, in your bag. You can check, um, for trades every day. Obviously those won't populate every day, but if you had 300 something last year, that's almost one a day. So and but there will be batches. They'll come in bunches. So anyway, yeah, thanks for sharing that, Lee. Okay. So let's go into the market. I'm already running late. All right. Yeah, so we're at 58%. I'd like to look at the state one percentage. Sorry, someone's like quiet. So we peaked around 58 something. We're kind of hanging around there. As you can see here, since the new year, we've been, here's 76, and then now we made 60, call it 65 here. And, if we don't make new highs here, which it doesn't look like it is, we just have to keep watching. It's just like a slow walk down, but it's still bullish overall for the market, so, all right, we got a lot of late people joining here. I got to admit them. And mute them. So it just seems like it's a slow walk down here. We'll see if it can get below this low, the 52. We didn't get much of a bump up this time, although the market price went up pretty good. So it's still bullish. Based off of this, we got nothing on state eights. So that's just telling us bullish, and at some point, if it keeps walking down here, there'll be a pullback. So that's what this is telling me here. The new lows, nothing different. I like to pull it out and just say, we're on a flat line, still flat line. So really nothing here. We get maybe little jumps, but nothing significant. I'd say consecutive days where you're bumping up and, well above, like 300, 500, that's kind of a big warning sign that we will see. But right now, nothing Nothing. Flat line, right? Patient is dead. Okay. Let me pull up SPX first. So we'll go through the indices. Last week we talked about, the target 3 resistance. So SPX got above that and it's holding. So that's very bullish. I think that's where we were last week. We were right on resistance. So the next day there, and then, Friday popped above, and we got a couple of days above there, which is very, very bullish, for market overall. Well, if it does, test it, that'll tell us if that turns into support or not. So that's your near-term support for SPX at 40.88. But that's showing bullish. NDX, that they're all in state 1 right now, across the board. So NDX came in, I think last week sometime. So that one's right up at the first resistance. So I talk about all the time, but kind of the normal path is we creep up to 1, kind of test support, and then run back up. That's what SPX did, like a perfect model of that. So we'll see if this turns into any kind of resistance for NDX. But so you have your near-term resistance. It's pretty much right on there right now. Target 2. And then, you got your support down here. The entry price is your first layer support. And let's pull up Russell. Well, that's loading. I will also pull up the SPX, our golden child here, the 50-day. So, obviously well above that right now. But I think this is going to be, as we showed in the market pulse, as things kind of are, slowly grinding lower for state 1s. This is going to be like a key indicator to watch. It has been, it's provide many good bounces. So, we're well above that right now, but always kind of keep that in the back of your head.
Yeah, if you look at the way you just had that up there, if you had a channel drawn in there, you notice that you're at the high end of the channel, like right now too. So just saying.
Yeah, I haven't done the channel on it. I do like channels. I don't know if this, you can probably, not to bash our graphics, but, you can probably do better charting elsewhere. As far as doing channels and things like that.
You can almost eyeball this one, man.
Yeah, but it's definitely been like right here, pretty tight upper channel. You could draw right up there on this leg. So we got a higher one and then this one. So the slope's kind of decreasing on these. When this ends, hard to say, but enjoy the ride while it's going on. The Russell, hopefully it holds through earnings, this bullish cycle here. The Russell, this has been leading a lot. I wouldn't say it's flipped over yet. I wouldn't say leadership's changed, but it's got a temporary pause here. So within a few weeks, if it continues the lag, then maybe leadership is switching. But this one's been leading for a while. You can see it bounced. It tested that stop loss area. Got down to 22.08, and the stop loss was 22.07. Pretty crazy. Anyway, so it bounced off of that, and I think I think they were up, yeah, it's up strong today. Strong rally for Russell. So this
These
one,
are other types of digital forms of
yeah, sorry. So near term, this would turn into resistance. Hopefully it can, get through that entry price, which will turn it back into support and make a run up. Obviously not the ideal pattern that we like to see like this, but tested, and it didn't break through the stop losses. So that's your support near term, and see if we can get through this entry price. But overall, things are looking pretty good overall for the market. Any questions, comments on the market overall?
Comment on the Russell there. Intuitively to me, it feels like the Russell's kind of tracking the USA COVID vaccine rollouts. I won't say success necessarily because it's too early to say that, but I think everybody's anticipating success, and since it's got more U.S. companies in it that aren't globally tied to other countries that are not doing so well.
Right.
I think the little pullback that we had just recently in the last week or so was due to the sort of the non-great vaccine rollout, that they had a couple little hiccups there, and then a couple of negative reports that were on one or two cases that caused rollouts to slow down. So I think that might have been kind of the cause for the little pullback. But since I think the U.S. is leading, I would be surprised if the Russell didn't come back to take some leadership here fairly soon. Just my personal opinion.
Yeah. Okay. Thanks, Dave. Thanks, Dave. Anyone else before we move on? Questions, comments? Okay, so I just kind of want to show you in the screener here. I know Sudhir was asking for this four-legged one, so now we have basically three different lists. I showed you guys these, I think last week or week before, the one leg and two legs. So this would be, if you're searching for like a call or put, you can use this this list, and I'll let's see how many are in it. So it's all equities. So we went through and basically did a basic search filter, and then we manually went through every single symbol as a list. So 392, and this, our focus here was, you look 2 months out, like a study or, a bullish pre-runner, can you get in at, like a 30 delta or 30 delta put? Is there, could you execute that trade? So we had 392 on that single leg. And then the two legs, so your spreads, 381. So we dropped 11 off of that call list. Not too many. So this would be, if you're doing your bull calls, bull puts, all that stuff, you can search with this. And then the last one was four legs. So this is going to be your iron butterflies, iron condors, things like that. So these all have weeklies. So the way that we filtered this one was completely different. We only picked ones with weeklies. So we took that, basically that spread list, and then, which ones had weeklies, those all made the list. And then we went through individually and we looked at, like not this week's, but next week's expiration. Could you do like a iron butterfly trade on them? So it's, they're not all like perfect, but they're all definitely doable as far as Shawn and I went through all these. So So those are in there for you to use if you have feedback on them, or if you have, or if you see an issue with liquidity on any of them. The worst thing is to go through and search and find trades, and it's a non-liquid symbol. So, that's why we went through and did all these. We're going to be applying these in the future to earnings and the studies down the road. We'll implement them into those, but right now they're just there for you guys to use. So,
Hey, Josh.
yep. Hey, Bob.
Hey. As I've been doing a lot of trades lately,
Mhm.
and this is not profound, so I'll admit it in advance, I've come to appreciate the value of liquidity, and I'm glad you're going over it.
Mhm.
And I've got several services that I subscribe to, and I've tried to figure out how professionals measure liquidity. And I got to tell you, I cannot come up with a common answer. One service I asked yesterday said, well, it's a combination of spread and open interest.
Mhm.
Didn't you try to come up with a definition of what spread is? I think a shook likes to use ask minus bid divided by the underlying price.
Yeah.
No, another guy who I respect, as I do a shook, said, no, it's ask minus bid over bid.
Yeah.
My point is, I increasingly appreciate the importance of liquidity.
Mhm.
I would sure like to get to the belief that, let me jump to my endpoint. I'm willing to take fewer trades that are safer trades. And
Yeah.
I'm slowly coming to the conclusion that a wide bid-ask spread compromises my ability to predict the outcome of a particular trade.
Mhm.
Help me through this. You can tell that this is not a statement, it's a question.
Yeah. Well, I mean, that's the kind of thing that we wrestle with as far as the liquidity. It's almost a bit subjective, based off of trading preferences and what kind of trade you're doing. But I mean, you're right on there. We include some that are, have maybe a little wider bid-ask spread. If you can get filled at mid, I would say, it's fine. But if you have to keep moving, your price lower, then at that point, that should trigger something inside of you saying, I don't need to do this trade. If there's not enough liquidity to get in and out, right around the mid price, I think that is the key. It's being able to execute around mid price, and not have to sit there for hours, or keep moving it down lower and lower, and like, well, how low do I have to go? If there's that kind of issue getting in and out, getting in, then getting out's going to be the same thing. So that is just taking away profits. So I think that is kind of how we approach it. We just find, we look at open interest, like trade volume, and the option spread, but really we go in and we manually have to look at it, because not all those things are telling. You still have to be able to, okay, if I'm trying to go in 2 months out to do a trade, the liquidity is going to be quite different than if I'm just doing 30 days or the next monthly. The next monthly, you're going to have probably a lot better liquidity, but if you're going out further, that's where the real question came in, and that's why we kind of did it manually. So these should be pretty good overall, better than we keep trying improving. So but that's kind of my roundabout answer on liquidity. I don't know, Shawn, if you had something else to add.
No, yeah, like you say, I mean, it seems to be a difficult target to capture because not all rules apply to every single stock. I try to use, like SPY options as a good base, but those options, the bid-ask spreads are so tight that it's almost like it's not fair to use that as a good comparison. But You can always see the wider you get, it's just going to be the more difficult. So if we find a great way to analyze it within the platform, we're obviously going to let everybody know. And using these liquid options lists like we've done, that's kind of our move to, try to get the list to a more manageable size, but then there's still going to be some work on your part to go in there and say, okay, this kind of fits the parameters or it doesn't. And somebody else mentioned too, you do have different cycles with options, right? Your monthly cycles are a little bit different. So one option might trade February options more so than it trades, March or April options. And that's going to be a big factor when you're looking at the volume of, the options or the open interest of the options, those monthly cycles. I don't know exactly how to figure out which stock is on a particular cycle. Commodities, I had it figured out fairly easily because they would list it as such. But you'll see it, some options, certain stocks might have more May options than they do, June or July options, but that would be a bit of a factor as well that you want to look at. So, I think you can find stocks that you want to use as a model, like maybe Apple options or, SPY options, and then start expanding it from there. And if that bid-ask spread does get too wide, like Josh said, if you want to get filled on that and it seems fair, use that mid price. And then if you want to come down a little bit too, but like Josh mentioned, don't get too far out of hand, because again, that's when you get into that area of where settlement prices are going to be way off no matter what the stock does. And then that could kind of hurt your demeanor a little bit.
Yeah, this is Dave, and I'd throw 2 cents. I think everybody that's traded options has had that dilemma that Bob's mentioned before, sooner or later, or consistently has it. And you both said something that was important. It's the stock price has a lot to do with kind of the people that have rules that they tried to apply. So certain ranges you use at the stocks within $25 to $50, and if it's over $100, then you use a different rule. Blah blah blah. Right. Well, it's like, well, what if the stock is at 35 and you got the $50 kind of thing? Where's that? It's like trading is an art, right? So that's part of the problem. And I think you're going to have trouble trying to get a one rule fits all. There's none. But factor in all those things that you mentioned: the price of the stock, the strikes that are available, the beta of the stock, if it's high volatility and a low price stock, then you're going to have trouble getting filled and getting in and out. You have to make trades that are going to be digital trades, like iron condors versus butterflies, for example. You got to trade out of the butterfly. But in iron condors, if you're within the range of the 2 short strikes, as long as you finish there, it doesn't matter. Everything's going to expire worthless. So bull puts, there's certain strategies that have a lot less impact on the spreads that are the liquidity. You might pay a little bit more on the getting inside, but as long as you're comfortable with the risk and reward, you don't have to worry about it getting out as long as you're right. So be right more and use a strategy.
Right.
It's easier said than done.
Yeah, and then as Dave was talking to, just as a side note real quick, one step that I use that's either right or wrong, but I found it pretty reliable for myself, is if I'm looking at the bid-ask spread on the options and I just assume that I'm going to buy it at the bid, and then I'm buying it at the ask and selling at the bid, and if that gap is too wide for, I'm like, there's no way I'd want to buy it for $12.90 and sell it for $12.35. If that gap is too wide based on that, buying it at the ask and selling at the bid, then I just won't do the trade. If it seems like it's just too far for that to happen, or just too far out of what I would want to take on for that trade, then I just wouldn't do it. And that's kind of one that I just do a quick glance on myself, just to kind of verify. If I had to do it, would I be willing to do that? And if I am, then I'm like, okay. But if it's one where it's like, the ask is $12 and the bid's $8, then I'm like, there's no way I'd want to do that, because I'm already losing $400. I would just be like, I just want to pass. So I kind of use that as just like a quick analysis tool for myself. Don't know if that would be valid for everybody else, but that's my personal opinion.
Yeah, and what you said before in the past is don't chase. You set up your idea ahead of time. Don't ever chase. You got plenty of ideas to choose from, so choose one you don't have to chase.
Yeah, I mean that goes to that plan, and I know I talk about it every week, and I just think that's a huge portion of trading that you have to implement when you're trading is a plan, and again, trading commodities with, when I would trade for particular customers, and if they didn't have a plan, it was just, they were speaking just off the wall. They were so sporadic, their trading, and they would just lose, money just basically trading commissions, right? So that's not really as big of an issue now because commissions are so, almost zero, and fees are a little bit, but yeah, if you don't have a plan, you're just, you're kind of lost in the wind, and you're just hoping things to happen. So, have that plan, and if it's too much, just kind of walk away, look at something else.
Yeah, well, great discussion. Bob, I hope I gave you at least some inkling of an answer there. Obviously, it's a difficult.
There is some good news, perhaps, at least from my maybe limited experience. I can almost always get the mid. Now, I'm only doing long calls.
Yeah.
So that could be part of it. The other thing that I'm noticing is that, let's just say, because I've put on 58 trades, and I'll show you the detail in a minute, but I put on 58 trades. And let's just say I always get the mid to get a discussion started. Boy, I got to tell you, I'm starting to believe that if I put the buy price at 5% under the mid and was willing just to walk away and see if it happened, I got to tell you, Josh, I think I'd get every trade. There is so much volatility in the options that although the overall trend of a particular trade might be up, you put it in at 5% under, it's going to hit. Now, I haven't done that, but it's one of the things that I'm considering for next quarter.
Yeah, no, that's definitely something to think about. I mean, you may be having orders sitting out there all day, though. I've had them, trying to get things filled, and I'm like, all right, just delete it. With the mid, not so much 5% below, but yeah, I think that's a good point. Maybe start 5% below, and then you can maybe walk it up, or there's nothing wrong with that. I'd be interested to hear how that goes.
There used to be a brokerage that would walk the trade for you. I don't think that happens anymore.
Yeah, that'd be cool. We'll get a Shook working on that. Yeah. So anyways, fantastic discussion. The other thing about this is, time of day too. So, as things are busier right at the open, and, kind of level out, and, drops on lunch. So there are, also times during the day that also factor in. So this is definitely a multi-dimensional problem. So, hopefully we're helpful, at least on, and, great comments from everyone. So
I was, this is Dan here. I'll just
Dan.
interject something just from a webinar that I was listening to yesterday by Tom Sosnoff from Tastyworks.
Yeah.
And he was talking about the BidAsk spread, and there was a comment that he made. He said he would never trade a single leg if the BidAsk spread was wide, because he said you'll always get a lousy fill. So what Bob just said about going 5% under the midpoint is probably one way to help address that. But he said the only way that he would trade if there was a wide BidAsk spread would be if it was a multi-leg option. But he said he would never, in his case, he would never do a single leg trade on a wide.
Did he define wide? What wide is?
Basically, he doesn't really explain things the why. He leaves it more up to an insinuation, I guess, because he's well beyond my mindset. But I think what it is just the market makers give themselves so much room with the spread. So that even if you go to the mid, I think most people are probably just going to go to the midpoint, and they probably already have that is the mindset. So they got much more wiggle room. So even if they get midpoint, you know, they're probably happy with that. But I don't know. He didn't really explain it in detail, but I just wanted to pass along. That was something. If he says something like that, I usually write it down because, you know, he's been at this for a long time. Certainly more experience than me, but
yeah, I think he's a billionaire too. So
oh, he is. Yep.
so
Good to be him.
yeah, I don't like the hat, but other than that, you know,
Yeah, well, that's his trademark, I think, you know.
yeah, something out of like the Muppets or something. Anyway, okay, all right. I ran over time, Shawn. I'm sorry. Got them all talking.
Yeah, that's no problem. No problem.
I don't know if you wanted Bob
Okay.
first or if you want to go.
Yeah, I just want to talk something real quick. Yeah, Bob's going to talk about some of the results and go over a couple things in a second. I just wanted to kind of go back on something Josh mentioned, and I think is something that we might want to note. If I come in here, so, you know, Josh mentioned that state 2, target 3, back test that he did last week for everybody. So, you know, if there's anybody that is putting that in the system or has put that in their system or is planning on doing so, you know, I would say definitely do it. Even if you're not going to live trade it, one great tool that we've talked about before and that I use on a daily basis, Josh does as well, is just our virtual portfolio. So once you get that daily alert in there for that state 2, target 3, you can always come to your daily alert tab here within the platform, click on your opening trades. I don't have one that shows up today. One that I've set up as my personal daily alert besides the earnings, you know, bullish pre-runners and the non-movers. But if you have that state 2, target 3 as an alert for the back test, and it does show up with the trade as an opening trade, you can always come in here, click on the trade, and then actually click on this plus portfolio button here and just put it in your virtual portfolio and track it. So, you know, you might not want to trade it live, but track it in your virtual portfolio. So use the back test to run that back test, use it to set up a daily alert if you like to trade, and then track the daily alerts. You know, it's not going to hurt you to put them in the account, follow them and see how they do, you know, over the course of time. And then, you know, a month from now or 3 months from now or 6 months from now, you might be like, hey, you know, I do like these trades and maybe I want to test some of these out. You know, fairly easy trades. We're talking about, you know, long calls. Again, we tried to make the liquidity list for you, so made it a little bit easier. You still got to use some stuff in there to verify maybe if those spreads are too wide for what you want to trade. But the virtual portfolio is a great tool to use. Once you have those alerts set up, super easy to put it in there and track them. So, you know, I just want to make sure that, you know, if you haven't done it yet, it would just behoove you to do it, track it, and then you can kind of see throughout time. You know, the worst thing is to come, you know, 2 months later down the road and say, man, I wish I would have tracked those in the virtual portfolio, because you can start now. You know, Josh showed you the test and showed you how to do it. So if you have the time, I mean, I think it's a great tool to start using. So just wanted to go on that. I do have some other earnings stuff that I want to talk about a little bit later if we have time. You know, earnings season is getting busy. Yesterday was the first day, I think, that we had some of those afternoon alerts come out. So if you've signed up, you should get those in an email, and you should be able to log into the system and see the morning, you know, and the afternoon alerts as our pre-alerts. So just want to make sure everybody's utilizing those if they get them. If they don't, you know, let me know or let Josh know. But, you know, Bob, as he mentioned before, he is tracking and trading those bullish pre-runners in the system, and he has some, you know, stats and stuff like that he has been tracking and keeping abreast of. So if you don't mind, Bob, I would pass it over to you and see if you can discuss those for a bit. I don't know if you're on mute or, oh, there you go. Cool.
You see it?
You might be on mute. Oh, there you go. Yes, sir.
Let me show you the summary first, and I'll show you the process and the procedure. So it all starts with Josh's spreadsheet. And the ones I've been using are the best trades, 90 to 100% win rate. And His criteria was no conflicts with bearish pre-runners, win rate greater than or equal to 90%, profit factor is 3 or better. So here's the summary. Of that list, there are 95 possible trades. The first trade I took was on 3/22, so call that 3 weeks ago. Of the 95, I placed 58, closed 39. There are 19 currently open. So the 39 of 58 win rate is 67%. In virtually every case, when I placed the trade, I just placed a profit target in TOS for 25%. I worked a couple of them, but the 27% tells you that I let most of them go off at 25%. Boy, you talk about efficient use of capital. Average days in trade was 2.9. If I'm doing $1,000 per trade, I'm in an account that's segregated for earnings. It's only got $30,000 in it. So, I've placed $58,000 worth of trades on a $30,000 account because of efficient use of capital and that the DIT number is so low. So the closed trade average gain per day in trade was 15%. Now, the closed trade average gain was 27% of the current 19 open trades. The average gain is negative 23%. I'll show you a little bit of detail in just a minute. You work through those numbers and your average per trade return is 10%. So $6,000 almost on a $30,000 account value gives you 19, almost 20% return overall. And I'll show you a little bit of detail. Shawn, can you see this toss screen?
Yes, sir.
Okay, so here are all the open trades. At the moment, it's sorted on days to earnings. So Taiwan Semiconductor is tomorrow morning before the open. So if it's a .0, it's before. If it's .5, it's after. And you can see that currently TSM is down 51%. I've got some doubts that that's going to make it. I said earlier that I wasn't going to keep a trade past the rule. The rule is get out. I don't know if I'm going to keep that deal with myself or not. I have no idea how, with the semiconductor shortage, I have no idea how TSM can be in trouble. So I'm inclined to wait. We'll see. But if I sort this on current open profit, you come down to the bottom, this 23.36% is the average of those. So that's an input to the summary that I just showed you.
Okay.
Shawn, Josh, I kind of think I don't know that I have much else to show, but you can see I'm tracking every trade. And I'll also tell you that I've been placing some trades quite early. I placed, look at this. See this list up here? Filled orders?
Yeah.
those are the orders that closed this morning between 8:30 and 9:48 when the market was just doing great. So setting the profit target as an automatic really does a good job of at least capturing 25%.
Mm-hmm.
When this quarter is done, I'm going to go back and I'm going to enter into the spreadsheet the closing price at the prescribed close. In other words, how much better or worse would it have done if I had held all the trades to the prescribed close?
Oh, okay.
Other than that, I'm extremely happy with how this quarter is going so far. Being able to return 20% on equity in 3 weeks just lights me up.
Right. Yeah, it's great.
Now, Bob,
And
you're
yeah,
layering, sorry, Shawn. Bob, you're layering on your layering on your indicators with the hull and
Absolutely. Yeah, let me show you. I can do that real quick. See this column right here? This one?
Mhm.
That's my score. Possible score of 3. Hull, rate of change, and MACD.
Okay.
I won't take a rate of change by itself. It has to be confirmed by MACD.
Mhm.
So I'm looking for at least Hull and MACD, but I won't take Hull and ROC if MACD doesn't confirm. But you can just see if I go down here to the bottom, the average of the trades that I've taken, Josh, has been 2.9.
Mm-hmm.
That's why I've only taken 58 of 95 possibles.
Okay.
There's some in there that are, they're ugly. I mean, no sane person would take some of the trades that I've let languish. And I've usually, that's what a yellow means.
Okay.
Okay. So I've, at least so far, I've really stuck to the rules. I'll take credit for process and procedure, but Josh, the real value comes from what, and I'm not trying to flatter you, but the real value comes from this 90 plus best trades criteria in my experience.
Yeah. Well, that's what we're trying to do is, make you guys some money, right? And work collectively to try and improve it. So, yeah, definitely appreciate the compliment. So, yeah, that's great. I think it'll be great to, kind of compare, Shawn will have all symbols, and kind of see if, which, if yours is doing better or, versus all trades. So it'll be interesting.
Right.
I'm trying to
Definitely, we can still see.
figure out how to give it back. Bear with me for just a second.
Oh, that's okay. Yeah, that's great, Bob, and I appreciate you taking the time and showing it. And like Josh mentioned, I am, tracking within our virtual portfolio. Thanks, Bob. I am tracking within our virtual portfolio within Delphian all of the trades that come out as confirmed, and then I'm doing a similar task on the side to where I'm tracking and looking at the trades versus, the indicators that you've talked about, Bob. And like you said, there's a decent amount that are coming out that those 3 indicators, whole, rate of change, and MACD aren't lining up. So the trade is a no-go based on some of the factors and inputs that you had. So I'm tracking on both ways, and like Josh said, it'll be interesting at the end to kind of see how everything plays out. So Bob, that was Bob's part, and again, I appreciate you showing us that, Bob, and divulging the information like you did and what you've been doing. Does anybody have any questions for Bob and what he was showing? No? Okay. Good job, Bob. Yeah, thanks again. And, mainly what I wanted to talk about was, Bob obviously showing those bullish pre-runners is a great deal, because I think they give some good insight into the stuff that's forthcoming. And, there are going to be those trades like TSM and that Xilinx and trades like that just aren't, moving as much as they normally do, or just not following the back test as we've tested the numbers in the past. And that's, I don't want to say standard, but that's going to happen, right? We all know that we can't make all of the trades be winners. We wish we could. But, what we're trying to do is we're trying to take other indicators in the market. And I spoke with Josh this morning and trying to run additional back tests using, the list that we have now, and running a back test on those stocks and seeing if we can find some that, maybe aren't above the 200-day moving average, and maybe excluding those, maybe taking some other indicators to see if the stock's not in a bullish state, or whatever the case may be, and running additional tests on that. So, those things are forthcoming. We're kind of working through that now, back testing it to see if we can get the numbers and see if we can get stuff to line up as we think they should. And if they do, then obviously we'll present that to everyone and let you see it. That, and I do want to make sure that everybody is utilizing this earnings, the print function that we talked about it last week. I used it this past weekend for this week, and it helps me quite a bit. I know I've talked about it. So, you go into your earnings plan, and once the plan populates, using this print function here, and then clicking on your trade details, and you can do a print function for any and all of these if you want to. You can use one or you can use none. But if you click bullish pre-runners and you say, show me all the trades within the next 5 days, hit print, it's going to start running based on that. It says it's been submitted, and then it'll end up showing up here under your earnings plan, and it'll have a number 1 there, and then you can actually open it up and see all of those trades for the next 5 days as they're going to come out. Really useful tool. Like I said, I used it to kind of plan out my week and to know what I was going to focus on. Again, if you're looking at some of those indicators like Bob was speaking about, the whole moving average, or, the MACD, those are going to change day to day. So, if I have a trade that I'm looking at on Sunday that's going to take into effect maybe on Thursday, I want to make sure and revisit all those other criteria that I'm going to be looking at, either Wednesday or Thursday, because many things could change over the course of 3 days. But at least it kind of gives me an idea of where I want to kind of put my focus. So, it's a useful tool, and I just hope everybody's using it. We're adding this stuff in, and I haven't heard any feedback on this or any of the other stuff that we have. So, if you have positive or negative feedback, you can send it over to me and Josh in an email, and we appreciate it, because it helps us kind of improve the platform and see if there's areas that maybe we're not thinking about that might make it more useful for everybody. So it helps us tremendously to do that. Other than that, I don't really have anything else to talk about. We got the pre-alerts coming out. Just make sure you're checking those. Again, we had 2 non-movers that populated last night, Goldman Sachs and JP Morgan. Goldman Sachs did jump up this morning. It's kind of coming back down now, somewhat in between that range for the non-mover. So both of those trades are, I think JP Morgan might be up a little bit, and Goldman Sachs probably as of right now is actually a break-even trade. So, fair, considering where Goldman Sachs was this morning. It was above 340. I think it went to 344, 345 or so. Did anybody trade either of those non-movers that had come out as of yesterday? Nobody? Okay. No problem at all. So, that's just what I wanted to mention, but make sure you're checking those pre-alerts, check those emails, because you're getting that morning alert, you're getting that afternoon alert, and those are where your trades are going to come out based on the earnings pre-alerts. But does anybody have any questions for me or for Josh or for Bob? Am I boring everybody talking because nobody's asking any questions lately? I just want to make sure I'm not boring you guys. What's that?
I think I got all the questions out of them, earlier.
Oh, all right, cool. I thought you were going to say I was boring you, so I was like, dang it.
You can blame me.
Definitely not boring.
Good. Well, no, I mean, like I said, this stuff is, I know I speak for myself, and I think for Josh as well. Like, this stuff is fun for me. I mean, I like running the analysis. I like taking the bullish pre-runner list that Josh produced and trying to come up with another back test using additional indicators to see if it can help the results. And sometimes it doesn't. I came to a standstill this morning, and I did all this work, and it was pretty much like a non-event. And I was like, well, that didn't work. So, let me try to look for something else. But I have fun doing it. And, you know, like I said, like I've always said, I think talking to this group, it brings ideas into my head that I can then look into the platform and share with you guys. And I hope it does the same. You know, questions are good because it lets me know that you guys are listening or everybody's thinking. And if you don't have questions, it doesn't mean that you're not thinking or you're not listening. It's just, you know, I enjoy kind of getting that feedback because it starts sparking different ideas in my brain too. So, you know, I hope everybody's using the bullish pre-runners or using the trades. You know, we're in that weird time of the market where, like Josh showed on the SPY and NDX and the Russell, where it seems like it's hitting that top, you know, of that channel, and it might be pulling back a little bit, but that doesn't mean that these trades aren't, you know, popping off in the morning. Like Bob showed, you get a big spike in the morning, and a lot of these triggers are, you know, a lot of those profits are hit in the morning, and then the market might be down the rest of the day. So the trades are coming to fruition and seem to be working. You know, the 67% I wish was a little bit better, but you know, you're still making money on the trade. So you know, it is what it is at that point. But I did want to say too, real quick, is Bob did show me last time about, you know, looking at the market change overnight or in the morning session. So, you know, if you have a trade working on something like TSM to get you up at 25%, and then you look at TSM and you see that the stock itself is up, you know, 10% on the overnight or in the morning session, you know, you might be able to figure out to be able to change that 25% profit on your option to maybe 30% or 32% based on the movement in the pre-market. So, you know, that's something to look at if you have time. You know, it does take some time to kind of run through those numbers depending on how many trades you have. Bob has 19 trades on, so trying to run through each of those symbols prior to the open would definitely take a bit of time that most of us might not have. But that's another thing to possibly think about. You know, if there's a way to capture a little more profit on some of those trades, take the time to kind of put that in action. But that's all I had, guys. I appreciate you guys spending the time with us. And if you have any questions for me, feel free to reach out via email or call me.
Thanks, Shawn, and you know, thanks, Bob. Definitely, you know, value. You know, I think everyone appreciates you sharing how you're doing in the live trading. So, you know, we very much appreciate that. So, thank you, and you know, thank you all for attending.
Thank you.
Thank you.
Good thing.
Thanks, guys. Appreciate it.